The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Newspapers are the topic of conversation, newspaper stocks, that is, with our strategist Ryan McQueeney, who joins me here. New York Times and Gannett are the ones you're going to be looking at. New York Times more of a media company than just a newspaper, right?
Yeah, definitely. And that was the story in its earnings report yesterday. Really solid earnings from NYT. 32 cents a share, beat the Zacks consensus estimate by 4 cents. That's 10 beats in a row for the company. Total revenue is up nearly 4% and also ahead of estimates. So just those two basics looking pretty good.
Is that what caused the stock to tick up?
That and more. So it is that kind of media side of things, and more specifically digital media and its subscription-based digital plan, which has been a very successful business move for New York Times over the past couple of years. They added 265,000 digital-only subscriptions last quarter. That's the biggest quarterly increase since right after the U.S. elections in 2016.
Wow.
So it's been healthy. It was remarkably healthy last quarter. They've now got 3.4 million digital-only subscriptions. I'm making the clarification there because you can also get, if you're subscribed to the newspaper and you get the print edition, you can also get the digital access as well.
Yep.
But with that 3.4 million digital subscribers, they're already 3/4 of the way to a 5-year goal of doubling digital revenues, and they're only 3 years into that 5-year goal. So well on their way to that long-term target, and kind of why we're talking about it today. The stock or the company announced a dividend increase. It's the first increase to the dividend that we have on record. That goes all the way back to 2013. It isn't really an income stock, as you would say, because the yield is still pretty low, only yielding about 0.6, 0.7% even with that increase, but up a penny from 4 cents a quarter to 5 cents a quarter if they hang out with that, or if it's a one-time thing, we'll see. But I think all signs were that yesterday's report for New York Times was positive. And if we take a look at the chart here, this is the 1-year look, but I'm really just going to be looking here at the tail end. We had this huge gap higher on the day of the report. That was February 5th, I believe, February 6th. And then we're still moving higher too. On today, the day after the report, kind of piling on into that momentum. It's at a 13-year high right now, New York Times shares.
Okay. Gannett Company, another one that you want to look at, gets a value and a growth score of A, despite what's going on in the newspaper industry. I mean, there's a lot of consolidation still happening.
Yeah, there is. This is a company that I think has really done the deal making and the consolidation that it's gonna do. Spun off the TV division a couple years ago, and it owns USA Today. That's the kind of marquee paper, but also owns like a dozen or so more local publications around the country. So another type of business where you've had to trim the fat over the last few years, but based off of this kind of new wave of digital revenue, these newspaper icons really of the industry have found out ways to survive while the kind of media upstarts are running into walls in their growth and realizing, hey, we got to get on a path to profitability. So it's an interesting kind of impasse right now for the online media industry and the traditional media industry. But I'm interested in this one because the New York Times is doing well. Maybe USA Today is doing well as well. So expected to report earnings in about a week or so. Here are the latest on the estimates in front of me. This is for the quarter ending December 2018. We've just got one positive revision in the last 60 days. The Zacks consensus is up from 49 cents to 51 cents. That's still a decline of about 7% year over year. And also that 51-cent consensus is still off from the 52-cent peak we saw 90 days ago. Looking ahead, we've got a positive revision for the full year as well. Well, this will be the Q4, but again, that estimate is down from where it was 90 days ago. The following year estimate down from where it was 90 days ago. you know, it's not the worst thing I've ever seen in terms of revision trends. This is a Zacks rank number 3 hold still right now. So we certainly have seen worse than this. The interesting part about this is that the dividend yield is really juicy for Gannett right now. It's a dividend yield of 5.8%.
Again, that's interesting given what's going on in that industry.
Yeah. Well, again, I think it's just, you know, at this point, you know, the slumping earnings, in some cases slumping revenue, isn't great, but I don't think USA Today is going anywhere for the time being, is how I would say it. So this is, you know, a high yield dividend stock. It's got a payout ratio of about 54%. That means 54% of its earnings are going to pay the dividend. It's a little bit high. I don't know if it's to the point where it's troubling quite yet. But at some point, you know, if your earnings continue to slump year over year, you want to maintain that dividend, that payout ratio is going to keep climbing higher and higher, and we're going to start having more and more questions about it. But again, you know, industry peer like New York Times just crushed it and is looking really good, and the stock's at a 13-year high. Gannett getting ready for its earnings report here soon. Maybe we're in for a surprise.
Yeah, hopefully. All right, do you own either of these two?
I do not.
Okay, check out more stock information. That's on our website, Zacks.com. Get over to the homepage, and it's all there for you to begin looking through. With Ryan, I'm Terry Ruffalo.